Welcome back. I'm Charles Lewis, the Austin area realtor who brings you topics and discussions that will help you make better decisions when you buy, sell, or invest in real estate. Today I want to give you a blueprint of how you can use rental properties to achieve financial freedom. I've owned rental properties myself, and as a real estate agent, I've also helped countless other people identify suitable properties, purchase them, and then find good tenants. One thing I've learned is that it's relatively easy to buy an investment property, but those who have a long-term plan become much more purposeful and are better equipped to navigate the ups and downs and the uncertainties that come with this type of investment strategy, especially when you're first getting started and it might seem like you're not making a lot of progress. Stick around for this video and I'm going to tell you all about it. The first thing we need to talk about is the importance of having a goal. Ideally, that goal should be specific and measurable. If your idea of financial freedom is some kind of vague concept without a number attached to it, it's going to be very difficult to figure out if you're making progress or how close you might be to actually achieving it. So let's start by identifying how much income you would need to be free to make your own choices. Work if you want to, take the day off if you want, go on vacation. When you woke up in the morning, you could do whatever you want that day because you have a passive income stream which enables you to maintain your current lifestyle. So how much money would it take to get you there? Well, now everybody's different, but you might start with your current income. Let's say you make $5,000 a month. If you had a passive income stream of that same amount, would that be enough money for you to quit your job if you wanted to? Remember, it's not mandatory that you stop working. Financial freedom is about having the choice to work only if you want to. Now here's a couple of things to keep in mind. If you quit your job, you would lose your medical benefits, 401k matching, and any other non-income benefits that you would need to pay for if you cut ties with your employer. Now, some of that could be offset with deductions in business expenses like depreciation. But to get an accurate number, you'll need to account for all of this. Another thing to look at are your debt payments. If your current income was replaced with passive income, you should be able to continue to make your current payments. But how much more free would you feel if all that debt was paid off? Now, you want to be as accurate as possible. But remember, you retain the right to change that number at any time. It's your number. At this point, we're just trying to quantify a number that you could work towards. Now, everybody's number will be different. But for example, let's say we set a passive income goal of $6,000 a month. If we had $6,000 a month in passive income, we could maintain our current lifestyle and have the freedom to do whatever we wanted. So the next step is to figure out what we would need to do to achieve that income target. Numbers like this can be achieved in many areas of the Austin Metro. At this point, we're not concerned with the cost of the house or the cost of financing. All we're looking at is that passive income amount. In other words, if we own this house free and clear with no mortgage, rented it at the current market rate, after we paid all the costs associated with owning the house, we would have $1,500 a month in passive income or cash flow. As long as we kept the tenant in there and they paid on time, we would be $1,500 a month closer to our passive income freedom number. Now for our example today, we set a goal of $6,000 a month. So we would need 4 houses like this to achieve that goal. This becomes an easy target to keep in front of us as we move forward to the next stage, which is actually buying the houses. We ignored the cost of the house and the cost of financing earlier, only so we could figure out that amount of passive income that the house actually produces. So many people get bogged down with the cost of financing because they listen to people who tell them that it's possible to buy a house with no money down and no credit and then collect enough rent to pay the mortgage and all the ownership costs, plus have cash left over, which is called positive cash flow. Now, maybe a house like that existed at some point in the past, but if that's your criteria, you're going to wind up spinning your wheels looking for a house that doesn't exist, and you won't make any progress towards your freedom number. So please, don't let that be you. Realistically, a house like this in the Austin Metro is going to cost you between $300,000 and $350,000. A 25% down payment means you would need at least $75,000 to $87,000 in cash to purchase this house with a mortgage. If you bought a house closer to the lower end of this price spectrum with a 6% interest rate, you'd be close to that forecasted $2,300 a month rent. These numbers include the insurance, taxes, and HOA fees from our original numbers. Now, these are not the types of numbers you're going to see from the investing gurus who want you to buy their training programs. But these are real numbers in the current Austin market. Remember, as an investor, you're buying the cash flow from that property. And you won't get to that $1,500 a month in passive income until the loan is paid off. So if you need to put a little bit more money down to get the mortgage payment closer to the rent payment, remember, it's your house. And by doing that, you reduce the principal amount and move closer to paying off the loan. So let's say you did exactly what I just described. You found a house priced for $300,000 in a neighborhood where the market rents are around $2,300 a month. You put $75,000 down and got a 30-year loan at a 6% interest rate. Principal and interest, taxes, insurance, and HOA fees come out to about $2,300 a month. You find a tenant, and that tenant pays you $2,300 a month in rent. So all of the tenant's money passes through you or your LLC and pays the mortgage and leaves you with $0 left over every month. Now, some people might look at this and say, that doesn't look like a very good investment at all. For one thing, if there's any kind of maintenance or repair, if the water heater breaks, the air conditioner goes out, the roof needs replaced, or anything else, you're going to need to come up with that money to do the repairs from some other source. How is this helping to achieve a long-term financial goal? Well, first of all, if you had $300,000 in cash, you could buy that same house without financing it, and you would have that $1,500 a month in passive income from day one. You would own a $300,000 asset, which would give you $18,000 a year in income, which is about a 6% return. What you're doing with the loan is using the bank's money to purchase the cash flow, and they're going to charge you for that. But in addition to that, you're going to find a tenant who is willingly going to pay the bank for you. So in other words, you invest $75,000 and sign some documents, and someone you don't know pays your way to financial freedom. 30 years of tenants will give you a paid-off house, and your initial investment was only $75,000. If you have to spend a little money along the way for maintenance, how is that any different than paying for new tires or brakes in your car? Now, to be clear, I'm not saying these are ideal numbers. I know everybody wants to find that house they can buy for less than market value and then rent it out for more than market value. But do you really think there are a lot of houses like that out there? You might find something like that occasionally, but it will be the exception rather than the norm. My purpose in doing this video was to show you the importance of having that long-range goal so it becomes easier to push through the ups and downs and the uncertainties when you're first getting started. Consider this. Would there be anything wrong with buying a rental house that had slightly negative cash flow if you were able to cover the difference until either the market rents increased or you were able to refinance a loan at a lower interest rate? If you think about it, that would be better than not buying any house at all, because you think you're going to find some kind of unicorn deal out there and you spend the next 5 years looking for it but never find it. This brings up an important point about the current housing market. We are currently in a market where home prices are readjusting, and a lot of people are afraid to do anything because they don't know what the future might hold. A house you could buy for $350,000 today was selling for close to $500,000 just a year or so ago. I believe this current market is filled with opportunities, and those who will be able to seize those opportunities are the ones who are going to be able to think and invest for the long term. I get emails, texts, and phone calls almost every day from people who think about buying or selling real estate here in the Austin area, and I'd love to help you out too. If you like this video, you should check out this other one that I did. And don't forget to subscribe to my channel and hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.